more on heavy metals right now, but with a bit more of a focus on silver, copper, and other industrial metals. Silver prices, in fact, falling today to their lowest level since mid-May, near $34 an ounce. Copper, though, rebounding from a 5-month low. Joining us now to talk more about this, Jeff Christian. He's the managing director of the CPM Group, a commodities research, consulting, and investment firm he founded more than 20 years ago. Jeff, great to have you here with Matt and me.
It's good to be here.
Hey, we've been spending so much time looking at gold and silver specifically, but talk to me about the industrial metals and what we're seeing in the trade right now.
Well, industrial metals followed oil and silver and gold down last week.
Right.
There was an added fill-up in that when the Chinese industrial production figure index came out, and it was a steeper decline than had been expected. You saw a lot of shorter-term investors bailing out of their LME positions, and so you saw some long liquidation, which caused the prices to spike down earlier this week. But as you said, there's been a little bit of a rebound because people realized they had overreacted.
Why, this morning when I saw that China was making moves to kind of curb inflation there, everybody usually freaks out on the equity markets here, and I would have thought that commodities, especially like copper, would also tank on that. They turned around. Why do you think that doesn't bother long investors in industrial metals?
I think there's a growing realization that while the Chinese have increased interest rates like 5 or 6 times now in the last several months, interest rates are up to 6%, and inflation is at 6%. So what they've done so far has been to raise the cost of doing business for some people, but they're not even anywhere near there. So people started realizing you still have 0% interest rates in China. This is not exactly stringent economic or monetary policy.
All right, so what's in the backdrop for these industrial metals, Jeff? Do you anticipate that the kind of trend starts to pick up again and we head higher?
Well, you've got 2 things going in favor of higher metal prices. First thing is, on a global basis, the economy is actually in pretty good shape. The United States is slowing down a little bit, but we're still chugging along. Europe is slowing down a little bit, but we're still chugging along. China's slowing down, but it's not a hard landing. We're trying to get down to 9% real GDP. So you still have very strong fabrication demand for industrial metals, and on top of that, you have investors with $63 trillion in cash trying to figure out where they're going to invest. And when they start looking at different sectors that they can invest in, commercial real estate, retail, copper looks a lot better.
Do you like the industrial metals over like a gold or a silver right now?
No, and I spend most of my time actually looking at gold, silver, and platinum group metals.
You do.
Let me ask you then, we've been talking all week about COMEX raising the margin requirements. Why, 4, 5 times in, a week or two, raise margin requirements? Doesn't it seem fishy? Who's the man behind the curtain doing that?
It's actually a committee behind the curtain, and they're not exactly behind the curtain. It's not at all unusual when you see really volatile markets for commodities exchanges to do that. The important thing to remember is that there have been a lot of really good quality academic and other studies that have shown that margin rate increases, such as we saw last week in silver, really have a relatively minor effect on driving the price down. So anybody who's looking at margin rate increases and blaming last week's decline in silver is just off the mark.
Really? It's such a huge drop, but look at the charts, it's dramatic, and they raised the margin requirements 4 or 5 times in that same period. It seems like pretty obvious.
Well, put it this way. On Friday, April 29th, we told our clients this thing's $49, it's going to $37. Within 2-3 days, it was $37. We weren't looking at margin requirements. We were looking at the May roll on the COMEX, which was over as of April 29th. Prices went from 37 to 49 over the course of April. May open interest went from 375 million ounces to 7 million ounces by April 29th. That roll was over, and that is why the price fell.
But then why raise the margin requirements in such a sort of stuttered way? If you're going to make the decision to raise them, go ahead and raise them once and be done with it. Why continue to do it over the period of...
Or would that shock the markets?
That's the same argument as why does the Fed raise interest rates at a quarter or 50 basis points at a time. You actually want to phase in your thing and see how it is, because this isn't an exact science. So as you start raising margins, you do it in small increments to see what effect you're having in terms of quelling not so much the price increase, but the volatility and the credit risk that these people are facing.
Jeff, just got a few seconds. So your year-end targets for gold and silver right now?
We think that metals could go back up in June and July, come off in July and August, and by the end of the year, silver might be around $26 and gold might be around $13.80, $1400.
Got it. Good to get some time with you. Jeff, thank you so much.
Always
Jeff Christian, we appreciate it. CPM Group Managing Director.